Again, welcome to the Accendo Traders Group. This is our stock market wrap-up for Monday, December 21st, 2009. Our website is blog.accendotraders.com, where we put together daily video technical analysis trading plans on a daily basis. Haven't been making them public the last couple of days. Really been sick and just haven't had the time. Just been lying in bed sick. So since I have a trading plan, I can go spend time with family. If they watch the video, they know that's kind of funny. So what was the day that was? Well, we all should know by now that the market ended up for today. That was kind of bolstered off of the dollar, kind of losing ground against the foreign currencies. What's interesting is that although the dollar went down, gold also went down today. There's usually an inverse relationship there. Also, there was no economic data today, so we kind of had to deal with what was out there as far as in the market. So again, we had the dollar going down. We had Alcoa upgraded by Morgan Stanley. We had Intel upgraded by Barclays. The healthcare stocks were benefiting from the Senate vote. No comment on that. So overall, the market ended up positive for today. The Dow up 85, S&P up 11, Nasdaq up 25. Of course, when we look at the overview, you'll see that we were actually up higher. So once again, what do you take from today's? No significant earnings. Walgreens and Conagra both beat expectations this morning, but nothing really that big. Again, as far as today's upgrades, all healthcare stocks, Humana, Cigna, Aetna, United Healthcare, WellCare Group, all upgraded, downgraded, nothing major, Nokia and Gap. But so tomorrow we do have some economic data. We have GDP estimate for the third quarter, existing home sales, nothing on the earnings front, and we still have our one split play. But let's go ahead and take a look at the overview of today's action. First, we are at FinViz, and we're going to get a look at what the market did today. And you can see we shot right on up in that first half hour. And that kind of goes with especially our futures trader, that the market, your big moves, your big best trades are in that first hour of the day. And then you can see we really just consolidated down for the rest of the day. Sideways move on the NASDAQ and the S&P 500. Our Rubik's Cube looks great. We can see our financials looking good. You can see our tech looking good. Some of our retail and energy looking good. So overall, we had a green day, and you're going to get that on an 85-point move. But again, you can see that our high was really around 10,460. So that's about 50 points higher for the Dow, with the other two basically being on par, close to where their highs were. Obviously, our advancing decline, 64% advancing. Our new highs, 92% of stocks made new highs, and over 60% of stocks are over the 20 moving average. Taking a look at our volume, you can see definitely we had a bullish breadth, but we also can see that the volume is lighter from Friday, which was lighter from Thursday. So volume is light today. Of course, as we enter a holiday weekend, that can be somewhat expected. And again, why you need to look at that first hour trading and get your money and go to lunch and don't come back from lunch. Have a long lunch. Switching over to the daily charts, we can see on the Dow, the lighter volume. Probably a little bad tick here on my telecharts as far as volume for Friday. But more importantly, you can see what have we been talking about for, I don't know, the past 2 months and a half. We can see our channel of a low about 10,200 and a high of about 10,000, 450-ish, 10,500. I believe is where we said to put your alert. So we are still well within our range. So as we head up towards the top of that range, what you expect, start shorting as we get back up there. Or, if we get above that, then try to play. But again, we are still well within that range of 10,200, 10,500 on the NASDAQ. Switching over to, so that was the Dow. Now over onto the NASDAQ, we can see something a little bit different. Especially with today's action, we were talking about this huge range that we're trading in, and then even in the last month, you can see this, 2,100 up to 2,200. But one thing we can also say, if we were to put a true top up here, at about 2200. And if I were to take the time to go ahead and draw a trend line, you can kind of say that we actually, on the NASDAQ, you might say that we've broken out. So just take this line here and draw it up there. You can see a nice support line going up. And now that we've broken above these highs, on the NASDAQ, we kind of do have a breakout play. So where can we go from here on the NASDAQ? There's a couple ways to look at it. First, let's go ahead and look at the daily chart. And you can see it's been a long time since we've been this high. And that gets us right in the lows here. Let's go ahead and switch over to the monthly chart. It's probably going to be easier to see. And open it back up. Still above the 50 moving average, which is great. And we have our little support range in here. So I would say this 2300 looks to be the next area, maybe 2350. But there would be two areas that I'll be looking at to see if we run into some resistance. 2350, and I'm rounding up here, gets us over here with this 2006 high, swing high. 2300 gets us right into the swing low here back in 2007. Now switching over to the S&P 500, we can see that we are still in that same range of about 1080 on the bottom and about 1200 on the top for us to break out. 1125 for the top. Moving on to the educational portion of our video, we're using the book Trading in the Zone by Mark Douglas. And we've been talking about managing your expectations, and the reason is that managing expectation is the key to eliminating emotional risk. I understand the emotional battle that goes in your head, the tick for tick battle. In the trading room today, someone said that if you say in your mind that if it just goes up a couple more ticks, I'll get out, then you should just get out right there, because that's the sign that you're in an emotional battle. The key to setting up, or the key to eliminating emotional risk, is to understand how the market reacts and look at it from the market's perspective. And understand that even though your edge, the system that you have in place, the chart pattern that you have in place, looks perfect in every way on the collective level, because again, all traders are looking at the 200 moving average. All traders know a head and shoulders pattern. All traders know the 50 moving average. Most professional traders see all these things, so we're all looking at that. So on the collective level, it all looks good. But on the individual level, because each individual trader now participating in this trade determines their own aspect, makes their own determination of whether or not it's a good trade. What you think is a good buy is a bad buy to somebody else. Doesn't make a difference what their rationale is, whether it's good or bad. They can impact whether or not the probability your edge will succeed. So if you can get over the fact that anything can happen and that you don't need to know what will happen to make money, then you can control your emotions. If you can understand that there's a random distribution, your system may be 70% right. All this 100% stuff, I'm not even going to comment that. You should know better. But even Alex is about 80% right. Great. But you don't know when that 8 out of 10 is going to be. It could be the first 2 wrong and then the next 8 right. You never know. So it's completely random when you're going to win and when you're going to lose. But you still have to have that system in place with yourself, putting yourself in a positive position to succeed, to win. You got to have a system. That doesn't mean you just trade randomly. And then also, that edge, that system, that criteria that you set in place is just an indication of that high probability. Again, you have to have a trading plan. That trading plan, that edge, that system puts you in the high probability of that trade winning. Whether or not it will win is be random, but you still have a high probability of winning because you have that edge, you have that trading plan. And finally, every moment in the market is unique. Anything can happen. 1 and 5 are basically the same there. If you can wrap that around your brain and accept that, then you are on your way to eliminating the emotional battles of trading. We had a great room today in our futures trading room, 10-day trial for $29. Alex did a great job today. As we talked about earlier, the first hour or so is where you're going to make the most of your money. If you're going to trade futures, we got a great broker for you. Any mini margins as low as $300, 20 free contracts, and we have a lot of videos on our website about how to get started with trading futures, but we also have a futures trading plan which really pulls it all together and gives you everything you need to be a successful futures trader. So I want to thank everybody. Trade at your own risk, and I will talk to you guys next time.